Hello and welcome your tune into this fresh new edition of the Climate Clock podcast. Thank you for tuning into all the podcasts that we have put forth for you so far. There have been interesting discussions and there have been interesting suggestions from all of you as well. And we are picking up one of them. You know, while we're talking about sustainability being a need, climate change happening for real, we also need to understand that all of it comes at a cost. Yes, the cost is a lot of time spoken in qualitative terms, but there's a lot of quantity that is required in terms of the money required to fight climate change as well. We as a country are still developing. We have limited resources, a huge population, and that is something that makes us being one of the countries that would need a lot of climate finance to fight the issue of climate change as well. But what exactly is climate finance? To understand this, the different aspects, what are developed countries like the US, China, Europe, all of them doing when it comes to fight climate change with the money that is available, we have with us a very special guest joining us on the podcast today. Thank you so much for joining in. We have Vibhuti Garg, who's the director, South Asia Institute for Energy, Economic and Financial Analysis. Such a pleasure to have you with us.
Thank you for having me here today.
And you know, while we talk about a lot of things that impact us at an individual level because of climate change, there are bigger aspects to it as well because you would need a lot of money to fight climate change. So, just to make it easier for our viewers, what exactly is climate finance?
While there can be different definition and, it's a multifaceted kind of approach, what we need for climate finance. Basically, any activity or that kind of helps in addressing the negative impacts of climate change, and it entails both mitigation, which is to reduce greenhouse gas emissions, or climate adaptation, which is once a negative impact has occurred, how to help people, kind of address or negative impacts of climate change. So that's on climate adaptation. So climate finance includes, as I said, financing any activity which relates to different economic sectors to address the negative impacts of climate change. So that's the climate finance.
Okay. So, is there a number to it? How much money would the world need or developing countries need to save themselves from climate change?
There are different studies that have been carried out. So at a global level, it needs a quadrupling of investments. And some of the studies, say, for example, from IRENA, has estimated that globally, the investment requirements are $5 trillion US by 2030. And if we consider the developing countries alone out of this whole gamut of countries that needs to shift from to low transition economy, what we say, the developing countries would need investment to the tune of, I would say, as per the IEA estimates, it needs investment to the tune of $1 trillion US by 2030 annually. And if we just talk about India, India alone needs about 400 to 500 billion US of investment by 2030. While these are the big numbers, however, we have seen that there is regional inequality. There is also sectoral inequality. So there are some sectors which are much more advanced, where the technologies are much more established. Say, for example, in renewable energy or energy efficiency, the investments are much more. But as far as the other technologies are concerned, whether it's green hydrogen, battery storage, which are more upcoming technologies, the investment is less. And as far as the regional inequality is concerned, definitely the developed countries still receive more share in the total investments that are happening. And whereas the developing countries, the global south, receives much less investment.
So, largely, is the developing countries who are in the need of this climate finance, and developed countries have enough to fight their own issues right now?
There is an investment gap even in the developed countries, but definitely they are able to access low-cost finance, and the kitty is much more. The developing countries are much more vulnerable to these climate change, and they have lot more responsibility because they have a growing population. They are witnessing economic growth, high economic growth, say in India and even in other countries. So they are definitely entering into economic activities which can produce more emissions. But how do we ensure that these newer investments that are happening happen to the low carbon sectors and not to the old conventional way of meeting your energy demands, which were contributing much more carbon emission? So that's where I think the struggle is. So definitely the developing countries who are more vulnerable need to have much more investments being done. But unfortunately, we are seeing that still, even till today, it's the developed countries, more than 70% is still going to the developed countries, whereas there's definitely an increasing demand from the developing countries.
So, there's been a long ongoing debate, the connection between developed countries wanting to provide the loss and damage or climate finance to developing countries. Have they done that? Is this still an issue where it comes to providing money from developed countries to developing countries?
There is quite a, I would say, initially in 2009, it was the first time, while there has been a lot of discussions happening since 1992 of climate finance and how much different countries, or especially the developed countries, needs to commit to developing countries. But what we have seen is for the first time in 2009 in Copenhagen, there was an agreement. And that too, the agreement was more, as a result of political negotiations. There was no science-based targets that was being set out. But that was a big positive development that the developed countries committed to 100 billion US dollars of investment by 2020 to developing countries. And in 2015, during Paris Agreement, that was further ratified. But it was only in 2022 when the developed countries actually, achieved that goal of 115 billion US dollars was invested to developing countries. But at the same time, as I said, it did lack science-based targets. Now, if you look at, we were talking about some of these estimates, what is the need for some of the numbers. So what we need from today's level is tripling or quadrupling of those energy investments to low carbon emission sectors. So 100 billion, now it's not a question of billions. It's like moving from billions to trillion. 100 billion is just like a small drop in the ocean. You know what? The needs are so high. 1 trillion US dollars of investments is what is needed on an annual basis, and it could be much higher because we still have not factored lot many other sectors which needs to transition. So if that's the case, I think we really need much more commitment from the developed countries. And that commitment has to come in the form of public finance or in terms of concessional loans and grants. It cannot be at the market rate because otherwise, the whole purpose gets defeated.
Exactly. So most of it is coming in form of debt. It is not exactly a giveaway like that.
Yeah, if you'll see, there had been a lot of commitments, say, in different countries in the global south. You must have been hearing the Just Energy Transition Program, where the JETP, what they call, there was a commitment from the developed countries. So different countries had tied up that they'll provide aid to some countries in the global south specifically to transition from fossil fuel. And those are mostly in the form of, debt, and that too at the market rate. And developing countries need low-cost financing.
Correct.
They cannot be kind of get into a debt trap where they take so much of debt and then, repaying of those loans end up in further taking more loans. And we saw what happened with Sri Lanka.
Correct.
They were in a huge financial crisis. And that was primarily because the amount of debt they had taken. We are now increasingly seeing what is happening in our neighboring countries, in Bangladesh, Pakistan. So that capital, what we are talking about, needs to come in the form of concessional grants and loans. It cannot be at a market rate, and that is still missing. So yes.
That's quite surprising considering that it's a cause which is very different from creating, say, infrastructure. We are basically fighting for your own survival. So it has
Right.
to come at a lower cost, right? It's quite surprising. But within India, if we talk about India, you said 400 to 500 billion dollars is what we need. Are we self-sufficient to get that money to fight climate change, or do we also need external assistance?
Um, if we look at, what's the current trajectory has been so far, I would say the clean energy deployment and specifically the renewable energy, it has largely been led by domestic resources. So it's been largely been, Indian government, banks, and financial institutions, which have provided that money so far. But now we are talking, as I said, from billions to trillions. Even,
Hmm.
as far as India's needs are concerned, that's humongous.
Hmm.
And while India is a developing economy, so it has its own other social and environmental goods. The government has to spend a lot of money on education, health. So there are different, development priorities.
Hmm.
So it becomes difficult for, the Indian system or the Indian banks and financial institutions to allocate a large sum of money for building, as I said, low carbon emission technologies. So definitely going forward, we need both domestic and international capital. India needs to tap more of ESG, which is your environment, social, and governance capital through in the form of sustainability linked bonds or whether it's green bonds. So we really need to develop that framework and systems to tap that ESG capital, which we are. If you will look at in terms of the overall issuances under the sustainable debt, it was about 1.5 trillion US dollars globally, but out of which India was only able to tap about 15-16 billion US dollar.
Okay.
So we have not been able to do that, and there are inherent challenges because we don't have the right frameworks and guidelines that can help the banks and financial institutions firstly to factor climate risk, and secondly in terms of the disclosures that are required. So there are stringent requirements to tap into the ESG pool of capital, but given lack of awareness and lack of guidelines available, so there is inherent issues for a lot of consumers and corporates to tap into that market.
Oh, okay. So I'll ask you in detail about this as well. There was green bonds, there were blue bonds at a point in time. Then you talk about sustainability linked debt. But when it comes to the funding, whatever we are getting, are the private players very active in India, or we have it largely coming in from the government and how much ever money we are getting?
The renewable energy growth story is led by private capital. It's less led by public
Hmm.
grants and money. It was initially supported by NBFCs, non banking financial companies, because the technology risks were very high
Hmm.
to begin with. None of the conventional banks and financial institutions wanted to lend money because the risk was higher and they were not ready to kind of put their money in. It started from NBFCs with small pool of capital, and then government definitely played a big role by providing accelerated depreciation to technologies like wind and
Hmm.
solar, tax holidays. That garnered a lot of interest from private players to set up some power plants. But still, the levelized cost of energy from solar and wind were very, very high. It was only in 2015 when the government introduced reverse auction.
Hmm.
That kind of market led development,
Hmm.
where different players were competing against each other and they were doing everything to improve efficiencies, lower their costs, and that really led to prices going down.
Hmm.
That led to huge deployment of renewable energy, and that's when it gave a lot of comfort or a lot of confidence
Yeah.
to all other players, including public sector banks,
Hmm.
to start lending money to the renewable energy sector. So now we have the likes of IRIDA, where government is pumping in a lot more money
Hmm.
from government budgets to lend to the renewable energy sector through IRIDA. Even the banks like SBI and all are putting now large pools of
Mhm.
money, but it was, as I said, largely
Mm.
being driven by the private sector and NBFCs in India. So that's now the big pool of money coming in. But what we need additionally, as we were discussing, to tap into, international pool of capital
Mm.
as well. So ESG financing, because to tap international pool of capital, they have a stringent disclosure requirement.
Mm.
We still lack the institutional capacity to meet those kind of frameworks.
Okay.
On the other hand, there are different standards or different requirements from different investors. And even within India, we have a different framework. So we really need to now align our framework with the global standards to make it more robust. I
Okay.
think that's where, SEBI and RBI playing a big role, and especially SEBI, to come up with a climate related disclosure agreement. There has been a paper being floated and they are seeking feedback. So
Mm.
hopefully in the next 1 or 2 years, I think there'll be more stringent norms in terms of requirements,
Mm.
not only by the top listed 1,000 companies, which was initially the case. We
Mm.
had our BRSR
Yeah.
reporting, but now I think, and more and more companies will be included. And given this push, they'll have more procedures in place. Then there'll be monitoring and verification of,
Mm.
meeting those guidelines. So I think more robust frameworks are being now actually put.
That's good to know because while we talk about, as I said earlier, qualitatively, if we talk about the impact, we now need to understand the quantitative impact as well. So you think, ECB had made those changes. They wanted to include how climate impacts the maybe the inflation numbers, the rate amounts or the rate cuts that they would take into consideration. RBI will start doing that very soon again because there has been a draft there, but
Yes.
nothing finalized yet.
Yeah, so they came up with the climate risk and
Yeah.
sustainable finance paper where they said that banks and financial institutions will have to necessarily do, stress tests and, build different scenarios of climate risk, because these risks are very difficult to estimate. So I think
Mm.
there has been some reluctance on because nobody understands those
Yeah.
risks are not immediate. Those risks will happen in,
Over a period of time.
over a period of time. So how do they factor that those risks? So they so building those different stress scenarios and, and coming up with the proper disclosures is something which RBI is now pushing banks and financial institutions to necessarily comply with, because understanding of physical risk is fine, but financial risk are much more difficult to
Hmm.
estimate.
Hmm. So there has to be a better way of putting that out in the system as well. So now let's come to the ways in which climate finance can be raised. You spoke about green bonds. What are the other ways in which a company can go ahead or I would say an institute can go ahead and tap for these funds?
Um, there are different ways, both public and private. So, if we talk about the public sources first, definitely there has been infusion of capital from the government through budgetary schemes. Then there have also been, incentives through tax holidays, accelerated depreciation, and that
Mm-hmm.
has been one way of, generating more money for such projects. Then you have your normal commercial capital, which is through your public banks and financial institutions as well. Secondly, I would say the private banks and financial institutions will also are also allocating large sums of money. And I think one of the other ways through which there has been some recommendation is also, some of the banks have already exhausted their lending limit to different sectors, including power or renewable energy. So there have been a lot of asks for government from to the government to increase some of these sectoral limits for
Mm-hmm.
these projects for more finance to be available. Then concessional capital will also play a big role. So, infusion of capital from the likes of multilateral development banks, especially for technologies which are not matured. So, you really need that concessional capital
Mm-hmm.
coming from MDBs as well. We have seen some of these credit lines say from World Bank to the solar rooftop.
Yeah.
So while big renewable energy projects, solar and wind, the technologies are well established. So both public and private sector banks and financial institutions fee are pitching that
Mm.
kind of money. But depending upon the level of maturity of technology, say for example, as I said, solar rooftop, we need these concessional credit lines. So multilateral development banks can play a big role. Even they can help in creating some of these credit guarantees because of the technology risk or off-taker risk,
Mm.
the other kind of foreign exchange currency risk. So there are a lot of risk attached to these. So if they can come up with some kind of credit guarantees, or also in terms of insurance products to hedge some of these risks,
Mm.
that can really play a big role in attracting more capital. Public private partnerships
Yeah.
model can also work, wherein for example, we have also seen government also pumping in money through viability gap
Yeah.
funding. So that takes like sponsoring some part of the project, but then the private capital can pull in more
Mm.
money into those. We also have some other revenue generating mechanisms like carbon trading.
Yeah.
So that's also being increasingly tapped into,
Mm.
or creating more demand for such products, because they know that there's an alternative way by after meeting their own targets, if they can sell and earn revenues through carbon credits. So that's also being looked as increasingly a way through which more money can flow into these projects. As well as, I would say, lastly, there are infrastructure investment trusts that
Mm.
are being created, which have been successful. So once, and this we can only use for projects which have already been developed, which are
Correct.
into 1 year of operation or few months of operation. If we can, then shift these projects to these investment trusts, that will help in easing of pressure from these banks and financial institutions. Then they can
Mm.
put that money into the other projects as well.
Mm.
So I think there are different ways and means through which
We can go about getting climate finance.
right.
Why have green bonds not been so famous? Or are they famous? I don't. We used to hear a lot, and suddenly there's not much chatter.
Yeah. India started issuing green bonds. I think it was first time issued way back in 2015 through IRIDA.
Mm.
But since then, it was only recently that the Indian government raised a sovereign green bond
Mm.
in 2022. Still, we have not seen that being done at a much faster pace, or raising of more and more, whether it's from the government sovereign green bonds or the individual companies going out and being able to raise these markets. It is primarily also to do, with lack of understanding or awareness at a investor level or a
Mm.
company level. And then secondly, we were talking about the stringent requirements.
Mm.
There is a stringent requirement for the bond framework. I mean, the companies don't understand those requirements and are not able to meet those requirements, because say for example, the climate bonds initiative
Mm.
identifies these projects and then do the monitoring and verification. So a lot of these projects are not able to meet
Mm.
some of those guidelines properly, and as a result are not able to raise finance. But more importantly, I would say in the last 2.5 years, what we have seen is the yield from these bonds have not been very high. The green tariff, or the premium that the green bonds would have had, is not being seen in the Indian market.
Mm.
It's just like 5 to 6 basis points compared to a conventional bond, where still you are able to earn 7.5
Mm.
basis
Mm.
point. So
Why would
why
somebody
would
go?
somebody
Yeah.
go for a green bond? Why
Mm.
not then a conventional bond? So
Mm.
I think that's something which we have not been able to address, and that is primarily because I think, especially when we are doing it from international sources, the kind of risks those investors see in India, while we have a good credit rating of the bond framework or our sovereign rating, but still the currency risk, the inflation risk are so high that you put
Yeah.
it at a much higher risk.
Hmm.
And if we kind of go, and if you have also seen, one of the bonds was in rupee denominated.
Hmm. The
So
demand goes down.
the demand
Hmm.
goes down. I mean, the investors then would factor those risks and
Hmm.
not being able to to offer high
Hmm.
premium.
Hmm.
And if we do it in USD, what will happen or in foreign currency? Then again, to factor these risks, there'll be a lot of hedging that would be required, and that hedging is expensive again for
Hmm.
India. So I think that's another factor. So rupee denominated, while it is beneficial for India to raise it, like a kind of a masala bond, just because they want to hedge these currency risks, but the global investors are not viewing it in a
Very
very
positive.
positive way. And lastly, there has been some limits on how much foreign investor can put their money into.
Okay.
That also kind of acts as a bottleneck.
Hmm. So, of course, if somebody's putting money in a different instrument, they would want it to be a little different than the
Yes.
usual bonds, right? The government spoke about climate finance taxonomy in the budget. It's again a very technical word for anybody who's watching the podcast right now. Can you explain what do they plan to achieve? Are there any fresh policies they can put in place which can make raising climate finance much easier? You spoke about a lot of things, of course, but immediately, what should they do?
Responding to the question on climate finance taxonomy, so it was a very welcome move
Hmm.
that Finance Minister Ms. Nirmala Sitharaman, for the very first time in the budget, though it's not something to spoke about in the budget, but
Hmm.
she did mention in the budget that India will develop the climate finance taxonomy. So this work was happening since 2021, where India wanted to develop its sustainable finance. Now we have shifted from just the sustainable finance to the entire climate finance taxonomy question. That really helps. What a taxonomy really helps in is identifying clarity in terms of which projects or which activities would classify as climate resilient or as green,
Hmm.
because different countries or different people have a different understanding of what can classify as green.
Hmm.
So having a proper taxonomy really helps in putting
Hmm.
like in black and white, what constitutes green, what does not
Hmm.
constitute green. So there is no gray area over there.
Hmm.
With that, in the absence of a taxonomy, there's always anybody can assume, and claim that this
Hmm.
classifies as green. So taxonomy really helps in that. And then we have green finance budgeting. Now it's
Hmm.
also being discussed by a lot of states
Hmm.
are going in that direction. Bihar has already done that. Rajasthan has announced, Maharashtra has announced. There are other states who are now looking at these different state examples and doing green finance budgeting.
Hmm.
Again, that really helps in allocating the resources. Uh, it's not a transfer of money when
Hmm.
we talk about green finance budgeting, but it's first realization of how much of the public government budget is
Hmm.
being allocated so
Towards.
far.
Hmm.
I mean, that understanding is also
Wonderful.
lacking. When you go and speak, at a state or a
Yeah.
city level, they don't know how much they are contributing
Hmm.
towards these green
Hmm.
economic activity. So first realization, or in terms of how much money is being spent on those activities, and then increasing that budget allocation to such activities can really helps not only the central government but also state and city level budgets to allocate those resources. So I think we are moving in that direction. And then we have also seen how you were also asking about some other examples. We've
Hmm.
talked about different ways of increasing climate finance. But one of the interesting ways in which we are seeing some of the states, like Tamil Nadu, has come up with a special purpose vehicle,
Hmm.
Tamil Nadu Green Finance,
Hmm.
where they are, and they have been able to get an allocation of 50 million Indian rupees so far, which is to be used for climate, livelihoods, as well as to ensure afforestation. So there are different aspects which they have included under the Tamil Nadu Green Climate Finance. And they have been able to pool in both public and private capital. So there is allocation from government schemes, there is allocation from public banks, as well as private capital. They have been able to access money from the multilateral development banks like World Bank, IMF. So there is a different, they are creating that special purpose vehicle and using that money for specified activities. So, which is again an interesting tool that some of these states are going ahead and using some of the special purpose vehicles to meet certain objectives.
I don't know if there is a definite answer to it, but would there be any state in India which is taking the lead when it comes to, say, climate finance or fight against climate change like that?
States like Gujarat, Karnataka are definitely the leaders, primarily because they have the huge RE potential, and they have been showcasing and they have been coming up with very progressive policies to promote development of renewable energy in the states. And also not within their state, but they are also coming up as export hubs to meet, requirements for other states too. Because while solar might exist, but I would say the intensity is not the same. While sun shines
Shines
everywhere,
everywhere,
but
but
the
yeah.
intensity is different. So the cost is much lower where the intensity is higher. And intensity is not the only factor. Land cost is a huge factor in the overall project cost when we are talking. Then there are other elements as well. The ability of the states to raise finance at low cost. Say, for example, Gujarat, where the off-taker risk is low because the distribution companies of Gujarat are in a much better financial health,
Got it.
and they are also buying renewable energy more. So that's where we are seeing. And if we talk about the CNI consumers, so there are a lot of CNI now with where corporates have set up net zero
It's
targets.
commercial and industrial
Yes,
customers, right?
sorry. Thanks for expanding. Yeah, CNI is the commercial and industrial consumer. So they are coming up as a big demand source, apart from the regular distribution, electricity distribution companies in India. They have their own net zero targets, the big ones, but then you have these smaller, medium and small sized enterprises as well, who still need more awareness about why do they need to shift to clean energy sources. Even if there is an awareness, but they don't have the right credit worthiness or the ability to access low cost finance is still a big bottleneck for them to shift to more energy efficient appliances or adoption of renewable energy. But then the bigger players are have ambitious net zero targets, and they are also driving the demand. And that's where a lot of investors as well as companies who are building up open access projects for them are able to sell it to such consumers. So they're definitely in states like Gujarat, Karnataka, Tamil Nadu was a leader, but then infrastructure development as well as the availability of land at a low price have been hindering some progress. But otherwise, Rajasthan, for that matter, is now becoming a leader. In last 1.5 years, Rajasthan has been a state which has deployed more solar than any other state in India. So they are very, very progressive as well. But going forward, if we don't build the whole ecosystem,
Correct.
what the state is now will be struggling will be lack of enough transmission infrastructure for it to transfer renewable energy from their state, because the whole demand is not coming from Rajasthan itself. As I said, they are becoming export hub. But the lack of transmission infrastructure will be a bottleneck for more projects to be deployed. Till the time in the next 3-4 years, more infrastructure capacity is being created for offtake of power from Rajasthan to other states. So when we talk about clean energy sources, I think we have to now also talk about the whole ecosystem approach,
Correct.
and not just concentrate or make financing available for just renewable energy projects,
Hmm.
but you need now supply chains to be developed,
Correct.
where to the extent of solar
Solar cell
modules,
module,
cells,
yeah.
polysilicon, even critical minerals. Now
Hmm.
you'll be seeing increasing discussion on critical minerals. How
Yeah.
do we secure critical minerals? So the financing has to be made available for that as well.
Critical minerals have been a problem. We're importing most of it right now.
Yes.
Vibhuti, I have to ask you because we are approaching COP as well very soon. There are discussions every time. Is there anything special we're expecting on climate finance? You said in 2022 they met their targets, developed countries. Loss and damage was spoken about in COP28. What more is expected now?
I wish the picture was much more positive. COP28, I would say we were quite hopeful. A lot of big announcements were made uh, to transition away from fossil fuels, tripling of renewable energy investments, um, as well as loss and damage, because last year again a lot of countries unfortunately had huge amounts of climate change
Climate, yeah.
impacts that they had witnessed, and they needed a lot of money under loss and damage. This year there was some bit of discussion that started, but in the last few months we have not seen that progress. But I'm hoping that maybe after the New York Climate Week, that discussions will start again. There was an increasing demand for creating an increased pool of money, because now we have to shift away from or unlocking capital from billions to trillions now.
Yeah.
So while there has been not been a number that has come up in terms of
What
where
is
do we
required?
shift from 100 billion to what, but increasingly 1 trillion number, we have been hearing some organizations talking about it, that if we can have developed countries committing 1 trillion US dollars of finance to developing countries, I think, because the requirements are much more, but if there is a way to increase, I mean, it's like 10 times the current amount
Yeah.
committed, but that's the direction in which we need to go. So we don't know if that will be agreed or not, but that's the ask from the developing countries. Then also we did hear COP29 in Azerbaijan talking about a voluntary fund where a lot of oil and gas companies will put some pool of money. Again, it's subject
Yeah.
to whether those companies will
Do
actually
that
put
or
that
not.
money or not. But at least there was some kind of announcement
Hmm.
that this is something that they are looking at. Similarly, since Brazil is hosting the G20, they also talked about creating or taxing the wealthy consumers, and that can lead to about 250 billion US dollars of investments that can be then made available. But we
We'll have
really
to
need to see
see.
how these announcements translate into reality. So these are some of the things that we have been hearing, which will be discussed during COP, negotiated, but what finally will
Only
come
time will
out,
tell.
time will tell. Yes.
And there's been a lot of conversation about how oil producing countries are, hosting the climate summit. So that's a different discussion. But Vibhuti, such a pleasure to have you with us on the podcast. And it's a very technical term, so to say climate finance, but you made it easy for us. So thanks a lot. It was a pleasure speaking with
Thank
you.
you. It was equally my pleasure to help people understand what
We
climate
need a lot of
finance is.
money to fight climate
Lot of
change.
money. Yes.
Okay, all right. Thank you so much for tuning in today and being patient. It was a long conversation, but I'm sure you will enjoy it a lot. Thank you so much for joining in.